All right, today's episode is all about how you can find the right stocks to trade. How do you know which stocks are the ones that you should be buying now versus other stocks which you should be leaving perhaps because they're overvalued? How do you know when to enter and when to exit? And basically all of that is going to be covered in today's episode of the podcast. But as always, before we get into the content of the video, I like to go over my weekly trading review so that I'm being honest, transparent with you, and so that you know that I'm actually doing this myself and I'm practicing what I preach. So last week, we had 19 trades with a net return of negative 0.2%. So very small loser last week, basically a break-even week, and that was comprised of a win rate of 84.21%, with an average win of 0.07% and an average loss of 0.45%, which equals an expectancy of negative 0.01% per trade. So pretty much every trade was on average basically negligible, pretty boring week. And basically that's because my average win was so small and my average loss was large by comparison. So I like to trade with high win rates, and that's why I allow my average win to be smaller, because I find that high win rates make me feel better when I'm trading. When I feel better, I'm more focused, I'm calm, and I can avoid making emotional mistakes when I trade. So that risk reward ratio is calculated for me. However, this week I let it get a little out of hand. So next week, what are the changes that I'm making? So I've timed my entry signals, which has reduced the number of trades that I'm going to be taking. I'm going to be taking only more likely trades. So there's going to be less losers and the average loser will be smaller. The average winner will be bigger. And so that means that my win rate is going to be higher. My average win will be bigger and my average loser will be smaller, which leads to better risk reward ratios. The other thing that I'm trying out now is what I like to call a strategy portfolio. And so basically, let's say that, for example, I'm day trading a stock index, and some weeks I win, some weeks I lose, and on average, I make money, but it fluctuates week to week. So I like trading stock indexes. I have a lot of experience with stock indexes, and that's where my experience is. It's where my performance is best. Now, a lot of the stock indexes are closely correlated, but not perfectly. Sometimes they might have one index that goes up when another goes down. And basically what I'm looking at doing is spreading my risk across 2 or more different indexes. This week I'm doing 3 to start with. And if one index is returning negative, like for example, this week, I traded one index, it was negative. However, the other ones were positive. That would offset my losses from this week and allow me to still profit when I otherwise would not have been profitable. And the maximum risk is not increased at all when I do this, because even if all 3 lose at the exact same time, my risk is split between the 3. So my maximum loss is the same. However, my results just become more smooth and more consistent. So that's what I'm doing with that. That's my approach for next week. Hopefully the yield is good. So now getting onto the content of the video, how do you find the right stocks to trade? So when you're trying to find the right stock to trade, you might be finding it difficult. For example, like you're on the chart, there's all these different stocks and you don't know which one to pick. There's a lot of variables that come into play as well when you're trying to pick which stock you should be trading, such as your capital. That matters when you're picking which stock to trade. If you have a very small amount of capital, there are probably some stocks that you just can't afford. So how do you know how to pick one? Do you copy your favorite trader on the internet? Do you look at the news to tell you which stocks are good and bad to trade? Do you just go by trial and error? You trade on one stock, see how it goes. If it's good, keep trading. If it's bad, move on to the next one. Do you social trade? Do you sit in chat rooms and ask other people what they think they should be doing? Did you get a tip from someone who's part of a company who says, oh, this is happening in this company, you should buy now? Like, there are a lot of different ways you can go about it. So how do you know what is the best way to do it? Well, in this video, I'm going to be giving you 4 steps to help you firstly determine which stock to buy, and as well as help you determine when to buy it, where to set your entries and exits so that you can be consistently profitable as a trader. Getting into it, the first thing you need to do is declare your variables or your criteria for your stocks. And so that is your capital, first of all. Like I said, your capital impacts the stock that you can buy. So for example, if you have $1,000 in capital, if you're not trading with leverage, then you won't be able to afford stocks that are over $1,000 price. If you have leverage, then maybe you can, but that matters. And also, if you're looking at buying more than 1 unit of stock, then you obviously have to have even more capital for that. So you have to look at which stocks you can actually afford with the amount of capital that you have. The second thing you need to look at is your risk tolerance. So if you have a very low tolerance for risk, you probably want to look at stocks that are less volatile. So stocks that are very volatile are probably ones like Nvidia. Tesla is pretty volatile as well. Like these are making 2-figure % moves over each week. These are very big moves, very big risk. And if you can't handle something like that, you might want to go for a stock that's moving a lot slower. Maybe like only 1%, 2% jumps each week. That's going to keep you a lot safer. And when you buy that stock, when it moves up and down, the number that you're winning and losing isn't going to be so big. So if it goes against you, you're not going to have such a big emotional response. It's going to allow you to stay calm and improve your trading like that. The other thing you have to take into account is the length of time you want to hold the trade for. So for example, some stocks might look like a good buy on a short time frame. So for example, they look like they're going to go up over the next, let's say 1 day. But then other stocks might be looking like they're bad over 1 day. However, over the course of 1 week, 1 month, or 1 year, they're looking very, very attractive to buy. So you need to consider which time frame you're looking at holding the stock for. And that's going to impact which stock you want to buy. So they're the 3 things you need to declare: your capital, your risk tolerance or volatility tolerance, and also the length of time you want to hold the trade for. So then we can move on to step 2 now, which is list all the stocks that align with your criteria. So let's say your criteria is a stock that is less than $1,000 in price. Its average daily move is less than 2%. And then the length of the trade, you want to hold it for 1 day. So then you go through and look at the stocks that are moving less than 2% per day. And you look at ones that probably have just come off a recent downtrend. Since you're looking to get in and out in 1 day, you might be looking to trade in a little pullback or something like that. And you look at the stocks that are obviously less than $1,000. You've got all those stocks, you've listed them out. These are your candidates. And then step 3 now is you want to perform a fundamental analysis on these stocks to determine which ones are the most undervalued and most likely to increase. So there are a lot of different fundamental analysis tools out there. You can do it yourself. There are services that help you do it. This video is not a video about fundamental analysis. I'll probably do something on that later down the track, but there are tons of websites out there that can basically do fundamental analysis for you if you don't want to. You can also get a fundamental analysis done by me on my website for $47. But yeah, lots of options out there. Find whatever works for you. So you perform the fundamental analysis on these stocks to find out what are the best ones that are likely to increase in value in the near future. So let's say that your candidates, you had like 10 to 20 stocks. You do the analysis and now you're left with like 3 to 5 stocks that are looking like a really good buy right now. So then you move on to step 4, which is technical analysis. This is where you are ready to trade and you're looking at these 3 to 5 stocks that you've determined are the best ones. You're looking for the best spot to enter. Perhaps, you're looking for that pullback after the uptrend so you can get back in at a good spot and ride that trend upwards. Maybe you're looking at the RSI, planning for a reversal of the trend. Whatever it is that you like to do with technical analysis, this is where you're going to do it to determine the best entry on those stocks that you've just done your fundamental analysis on. And just like with fundamental analysis, technical analysis is also a service that I offer, also $47, so you can get that done by me. If not, there's also you can get custom-made strategies which do all of the technical analysis for you and instantly tell you when you should be buying and selling, how many units, when to get out, stop losses, take profits, everything is covered. So if you want that too, that's also an option on the website. But basically, step 4 is do the technical analysis and find the best point for entry. Once you find that point, then you buy in, you've got the units open, you've found the best stock, you found the best trade, and now you're in the trade. Moving on to step 5 now is journal. You want to document your trade. I say this pretty much nearly every video because it's most important. You want to write down the date, you want to write down the time that you entered that trade, which stock it was, you want to write down your entry price, you want to write down your stop loss and your take profit, where you set those. Also write down your exit price, whether you won or lost, as well as how many dollars you won or lost. This is like the bare minimum that you want to track in your trade journal, and that's going to allow you to collect data, which will allow you to form relationships, which you can use to improve your trading approach over time. That means your technical analysis will get better, your fundamental analysis will get better, your returns will become exponential. And so that concludes the 5 steps. You should now know how to declare your variables, pick a stock, do the fundamental analysis, do the technical analysis, and then journal your trades so that you're consistently profitable, your returns are increasing, and your trading experience is overall calm, it's consistent, it's following a strict methodology, and you know exactly what your money's doing at what time. And so that concludes the episode. I hope you found it valuable. I hope you learned how to pick stocks that you want to trade, as well as how to go about finding the best entry price so that you can be more likely to profit. If you liked the video, please hit the like button. If you disliked it, hit the dislike button. Leave a comment, perhaps on something you want me to cover in a future episode of the podcast. Subscribe to the channel if you haven't already, because that's going to let you be notified when I upload new content so you never miss lessons such as this one. And share it with a friend if you think they'll find it valuable as well. I mentioned it in the video. If you want technical analysis or fundamental analysis done by me, I'm happy to do that for you. That's offered on the website. If you want a custom trading strategy designed specifically for you, that means whatever instrument, whatever time frame, whatever risk tolerance, the amount of trades you want per week, the size of the winners, the size of the losers, the win rate, whatever your requirements are. My job is to make it profitable. Your job is to profit. I've also got a free money management course for day traders that used to cost $200, now completely free on the website. I have a free ebook, The 7 Deadliest Mistakes Beginner Traders Make, as well as a risk management course that's releasing soon. You can get 47% off if you pre-order. That's everything I do on my website. If you want to get access to any of that, just go to theachievementapex.com and all of it is laid out easy for you there. With all that said and done, thank you very much for watching the video, and I'll see you again in the next episode. Bye-bye.